We're going to give you 3 years to get your situation in order. Otherwise, you're delisted. There's laws. It's not like we've just created a new law to target Chinese companies. The United States has continuously abused export control measures to suppress other countries' enterprises. No, China, you've just gotten a pass this whole time. Either they have to allow for transparent auditing to happen, or they have to delist. And I think you're going to see a lot of them delist. I've mentioned how Platt has limited its foreign exposure and also its Chinese exposure in the index. That is a very good move by Wisdom Tree. We've got a couple articles here. Let's start. I've got the same article from the US, and then I've got the same article as being mentioned from the Chinese press. So you can see a nice little comparison contrast here. Here's this one, investing.com. It's actually, this news is actually not like widely available. If you search for this, Trump signs bill that could kick Chinese firms off U.S. stock exchanges. U.S. media companies aren't jumping to cover this. He's actually signed the bill. This is passed. This is now signed into law. The Holding Foreign Companies Accountable Act that would kick Chinese companies off U.S. stock exchanges unless they adhere to American auditing standards. Holding Foreign Companies Accountable Act bars securities of foreign companies being listed on any U.S. exchange if they have failed to comply with the U.S. Oversight audit rules for 3 years in a row. The act would also require public companies to disclose whether they are owned or controlled by a foreign government. It isn't going to go into effect right away. They have a little bit of a grace period to get their books in order, so to speak. Now, here's from the SCMP. Donald Trump signs law. Now, this was interesting. 217 Chinese firms with a combined market capitalization of over $2 trillion are listed on major U.S. stock exchanges. So within 3 years, they need to comply with this rule. So they got 3 years. This is going to cause a lot of issues. It's surprising to me why no one is really covering this. You got 217 Chinese firms. And basically, the reason why this is a big deal is because it's kind of been like a, handshake, wink, wink thing on Wall Street. The Chinese companies don't need to, these laws aren't new. This law has been around, right? If you're a public company on a U.S. exchange, you got to have Sarbanes-Oxley, you have auditing requirements, you have all these rules, right? I mean, right? And in 01, Enron, all the right, there's laws. It's not like we've just created a new law to target Chinese companies. What has happened, though, is that we've basically kind of given the nod that the Chinese companies don't need to comply with the rules to the letter of the law. We've kind of given them a pass. And, if you've ever managed people and employees or raised children, I can tell you that does not produce the right outcome. Just give them a pass because you want to be the nice boss. That's not going to work out well. So we've given a pass to 217 Chinese firms with over $2 trillion in market cap for 20 plus years. And would you say that they're going to view this rule, this holding foreign companies accountable law, with understanding, or do you think they would be impugnant? I'd say probably the latter. That's pretty much the tone what you get from this article. The law, which applies to all foreign companies listed on U.S. exchanges, but is widely regarded as being directed at Chinese firms, is the latest move from Washington targeting some of the biggest players in China's economy. China's Ministry of Commerce said it opposed the move and will take necessary measures to protect Chinese companies. The United States has continuously, here we are, we're the bad guy. The United States has continuously abused export control measures to suppress other countries' enterprises. No, China, you've just gotten a pass this whole time, causing serious damage to the international economic and trade order and free trade rules, and posing a serious threat to the security of the global industrial chain or global industrial supply chain. I didn't misread that. There's two chains in there. We once again urge the U.S. to stop unilateralism and bullying, give fair treatment to companies from all countries, including Chinese companies. The irony is We're actually doing this exactly. We just haven't done this for the past 20 years. We haven't treated all companies fairly. We've had different rules. No, same rule, just different enforcement of the rule. Basically, we don't enforce the rule the same for Chinese companies, but we enforce the rule just as strong, more strongly, if not the strongest on U.S. companies, but we give Chinese companies a pass. Why does that make any sense? Because for some reason, we've wanted to try and help China come into their own and hope that they would open up. Well, here it is. They haven't opened up. They're not coming into the U.S. world or the democratic world of kind of democracy and capitalism. It's not happening. That ship has come and it's certainly sailed on by. Now, they are claiming to be a victim. While we know that there has already been well-documented fraud. Oh, Luckin Coffee? That's like the Starbucks of China. Luckin Coffee, not an accidental cooking of the books, like a deliberate cooking of the books, was now delisted from the U.S. exchange. And there's other cases of this too, of just outright fraud. There's a bunch of documentaries on the fraud going on right now. I mean, there's a bunch of fraud going on with Chinese companies. And for some reason, U.S. certified public accounting firms can go and do their audits of pretty much every other company listed on a U.S. exchange. Remember, they don't have to list on a U.S. exchange. They can have ADRs. They can list on foreign exchanges and have ADRs, but they're listing on U.S. exchanges, but they're not following the U.S. rules. This bill didn't introduce any new rules. It just said you have to follow all the rules, just like everyone else. And we're going to give you 3 years to get your situation in order. Otherwise, you're delisted. But it would require a U.S. audit firm to analyze the books of these Chinese companies. Guess who doesn't want that to happen? The CCP. CCP doesn't want these books scrutinized because the CCP knows, just as we've talked about on the show, that many of these companies are really just an arm and extension of the CCP. Look at all the tech monopolies in China. Alibaba, Baidu, Tencent, the list goes on. Meituan, Dianping, the list goes on and on and on. There's so many Chinese tech platform stocks now these days, and we don't really understand what's happening in the books. We don't. And now, either they have to allow for transparent auditing to happen, or they have to delist. And I think you're going to see a lot of them delist. And that's good, because ultimately, you're protecting U.S. investors from encountering another Luckin Coffee situation. And you are giving an advantage to firms that do comply with the rules, right? Because there's a real cost to do this auditing, right? There's a financial cost just to have the auditors come in. It also requires you to run your business in a little bit more of a sluggish way. You can't move as quickly when you have to have all these reporting requirements in place. It just slows a lot of things down, right? Whether it's doing deals, rolling out new investments or business units, or it slows things down. A lot more oversight, more review, and you got to comply with the rules. And that's part of the reason why some companies don't want to go public, because they don't want to have to deal with the rules. Chinese companies got the best of both worlds. They get to get access to the U.S. capital markets and not comply with the rules. Of course, I'm going to take that deal every day of the week. Well, times are changing. And this was actually passed, this bill, with pretty much universal support, bipartisan support, right, from Republicans and Democrats that introduced the bill. It was passed unanimously in May and was overwhelmingly approved in the House on December 2nd. We need to see more of this kind of stuff. It's not targeting China. It's just providing an even playing field. It's not even saying we're going to penalize Chinese companies, which is what they're making this out to be. It's just saying everyone's going to play by the same rules, which is how things were supposed to be happening, but for many reasons have not. And the same thing is what we're seeing happen with Chinese tech protectionism, which we've covered on the show. We had Benedict Evans on many times. And so we're just seeing that the U.S. has allowed our companies to be put at a disadvantage for whatever reason, and many times favoring, Chinese companies in their stead. And that needs to change. And it's not a partisan thing, as is evidenced by this bill. It should be a bipartisan thing. It should be a no-brainer. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.